This week in economics on the 16th of April 2016. Numbers man here. We have a number of items, looks at this economic situation. The IMF had a meeting of the G20 in Washington. Madame Christine Lagarde held a press conference, and we'll have that as we conclude our part here. And on some of our outlets, you will hear more of the press conference, an edited version, and also a press conference given by the Chinese Minister Liu on the upcoming G20. It'll be in July in China. But firstly, we'll go to the Federal Reserve and its report here, statistical release, industrial production and capacity utilization. Industrial, and it's dated the 15th. Industrial production decreased 0.6% in March for the second month in a row. The first quarter as a whole, industrial production fell at an annual rate of 2.2%. A substantial portion of the overall decrease in March resulted from declines in index for mining and utilities, which fell 2.9% and 1.2%. respectively. And if we look at some of the numbers here, dive a little bit deeper into it. This is industrial production capacity utilization summary. Industrial production, looking at the total index here, 2015 105.2, and February of 2016 104 and 103.40, I should have said there. And major contributions to it, if we look at, we'll just look at March, is 100. This is the final products. Consumer goods 102.9, business equipment 101.2, non-industrial supplies 108.3. Percentage of capacity. If we go back to from 1972 to 2015 at 80 there. Some of the high capacity years, 1988 and 1989, 85.3. Low capacity in 1990 and 1991 at 78.8%. And we continue to move on here. We'll get to January of 2016 at 75.8, February at 75.3, and March at 74.8. And if we look at mining, we talked about that earlier. In March, it was at 73.7%, and utilities at 73.7. Now, the highs for those was, 1988 to 89. They were at 86.2 and 93 for mining, and 93.2 for utilities. That was some of the high years, and of course some low years there also. We won't really go into that part of it, but what we shall do is adding at manufacturing output fell 0.3%. The sizable decrease in mining production containing industries already downward trajectory. The index has fallen for each of the past several months on average of 1.6% per month, at 103.9% in 2012's average. The total industrial production in March was 2% below its early year level. Capacity utilization for industrial sector decreased 0.5% in March to 74.8%, a rate that is 5.2% below its long range, and that would be 1972 to 2015. Market groups here in March: consumer goods decreased at 0.4%. Indexes for durable goods for consumer energy products each fell 1%, while the output of non-durables edged down. Amongst the non-durable goods, decreases in automotive products, and for miscellaneous goods were slightly offset by gains for home electronics, for appliances, furniture, and carpeting. And that basically means people are either renovating their homes or buying new ones. The decline for consumer energy products reflects a drop in utilities. However, the output of consumer fuel rose. The production of business equipment moved down 0.4% because of a decrease in the index for transportation equipment and for industrial and other equipment. The output of defense and space equipment, respectively, as 1.2 and 0.5% of their. Let me make sure I get this right. Okay, that's 0.4%, moved up 0.4%. That's the defense and space equipment. Getting ahead of myself here. Index for construction supplies and business supplies declined 1.2. That would be for construction, and 0.5 for business supplies as a result of decrease. For energy materials, for the first quarter, the output of consumer goods rose despite a drop in consumer energy products, but the index for most major groups decreased. Manufacturing output decreased at 0.3 in March. The production of durables moved down 0.4%. The largest decline, about 1.5%, were registered both by motor vehicles, parts, and by electrical equipment, appliances, and components. Several industries increased with the largest, near 1%, for computer and electronic products, after increasing 0.9% in January, decreasing 0.5% in February. So a roller coaster going on here. For the first quarter, manufacturing output moved up at an annual rate of 0.6%, roughly reversing its small decline in Q4 last year. The drop of almost 3% in mining in March was the largest monthly loss since September of 2008. That was the start of the Depression. Capital utilization for manufacturing fell 0.3% in March to 71.1. That was what we went over there. And let's see. The Federal Reserve issued its annual revision to the Index of Industrial Production. New annual benchmark data for 2014 were incorporated in it. And we talked before about data, specifically big data, and this is an attempt to get on top of it. And I'm just looking to see, okay. That's basically that part of it. Another item we want to cover is the banks. And second here. Okay. Here we go. This was a report. Reuters talked about it. Wells Fargo is the only large bank to become significantly more important to the global financial system in recent years. That's a government research group. The Office of Financial Research will go that report in just a minute. The importance of world's largest bank using data from the Basel Committee on Banking Supervision. The other banks in this, and let me just go to this chart here. It's much easier to do. Identified several banks to be significant there, and I'll just name a few of these banks: J.P. Morgan, HSBC, Citigroup, Deutsche Bank, Barclays, Bank of America, Credit Suisse, Goldman Sachs, Mitsubishi, I'll get it right in a minute here, and Morgan Stanley, Royal Bank of Scotland. They're all on the list, and Wells Fargo down here. However, if we look at the actual list themselves, let me go for these banks: the Agricultural Bank of China, the Industrial and Commercial Bank of China, and then next is Wells Fargo and the Bank of China, as being very important to the world economy. The conclusion here: the systematic importance scores of U.S. GSIBs are amongst the highest scores of the Chinese banks, increased the most in the last year for which the data was available. That's 2014. The update is important. Wells Fargo is an exception there. It increased 18%. For the first time, the Basel Committee publicly disclosed a list of international banks that submit to systematic important data. This data allows a deeper analysis of the systematic importance of all reporting banks. The data revised except for a handful of borderline banks. Nonetheless, won't get into the borderline bank scores and total exposure there. A number of them there. State Street, Bank of New York, and Mellon is one of those on the list there. Royal Bank of Canada, and their exposure too. So basically what that means is that the U.S. banks' exposure, direct exposure to China and Hong Kong are low at $148 billion. However, U.S. banks may also be exposed indirectly to risk in China through their $144 billion exposure to the U.K. The increase in Chinese bank accounts is consistent with early indicators of a systematic risk in China, and its stress test, the Bank of England stress tests exposure of UK banks to China and Hong Kong, the total being $531 billion in 2015. The exposures have grown rapidly and exceed UK banks' exposure to Euro area countries such as Portugal, Spain, and Italy. I'm sort of coming up on this, but basically this is where these banks are exposed. Bernie Sanders has talked about this. This is the Basel Committee for Banking Supervision released its annual systematic data for the world's largest banks. That was in November of 2015. Regulators will use the new data to determine the capital requirements for these banks. The information also helps in analyzing the risks that the highest banks pose to financial stability and how these risks are changing. This year, additional data were released to the public, allowing a more detailed international comparison. Using the data, these data, the brief, just a second here, shows that systematic importance scores rose significantly for three large Chinese banks, and Wells Fargo continue to have the highest systematic importance. The scores show that many of the large U.S. banks are highly interconnected and lack substitutes for financial services they offer. So this is one of the things we'll be keeping an eye on. It's where the big banks are. You've heard lots about the big banks and too big, quote unquote, to fail. That in itself is can be farcical. Now, let me just grab a Reuters thing. Investors followed in profit downturn. This is from Reuters. Earnings shift into high gear next week. The earnings recession that began in Q3 2015 expected to continue into Q2. profits to fall 2.2%. Reporting ramps up next week. We'll have Alphabet, which is Google, IBM, Intel, a host of consumer names, Starbucks, Humor Brands, and Coca-Cola. Cautious optimistic strategists are pointing to modest rebound in the energy sector. The first quarter should come in as expected and would be a third quarterly decline in earnings. Around $40 a barrel of oil. We'll get that in a minute. We might expect negative 2016 there. Here in terms of these prices, and if we look at, I believe we'll go now to the BBC. As Citigroup's profits fell tremendously, so we'll be looking at that particular situation with going to have to go to the BBC anyway. Nonetheless, some of the reporting here is interesting from that standpoint of the instability, and of course we'll get to that with Chairman Lagarde and the IMF. The producer nations, as for petroleum, are talking about freeze. It's only talk at this point in time. The NBA to allow shirt sponsorships, so now I'll be on the shirts. Citigroup's quarterly profits plunged 27%. Fall in Q1 profits there compared with a year early. Citi, which is restructuring to focus on more profitable business, saw net income fall to $3.5 billion. That's 2.5 billion pounds from 48.8 billion earlier. Energy protection, energy shares, energy earnings per share were $1.10. Analysts had expected Citi's earnings per share. This energy closer to 103. Citi was not alone in reporting a low year-over-year profits. Earlier, J.P. Morgan reported a 6.7% drop in profits. Bank of America profits fell 13% in Q1. Wells Fargo reported a 7% drop there. Citigroup has the largest drop in profit because of its great exposure to emerging markets, where economies, of course, have been slowing down. The bank has been selling assets and leaving less profit markets there. This is Mr. Kobat. So the first quarter, including significant repositioning charge, of $491 million there. Citi was one of few U.S. banks to receive regulatory approval for its living will. That is, bank planned to shut down operations in the event of another financial crisis. So we're starting to see some reality out there in the political campaign in the U.S. Bernie Sanders was labeled by many, including Paul Krugman and others, of talking gibberish. The Chinese economy grew at 6.7%, and we'll get there. We'll hear from Mr. Liu, who was talking about China's plans. This is in Q1. It's an annual rate of 6.7% growth in China there. Consumers also appear to be spending, with retail sales showing a robust 10.5%. Investments in industrial assets and infrastructure registered a surprise jump of 10.7% in the 3 months to March. This is an attempt here, according to BBC, and China has been doing this to transform itself from an export-led economy to a consumer-led economy. They have, as it used to be said, the horses to do it. Last year marked the slowest growth of the Chinese economy in 25 years, with a 6.9% growth compared to 7.3%. 7.3% was a little bit of what we call overheating. The government has set the target low range of 6.5 to 7%. They are 3/10 down on that. They will more than likely make their goal for this year, and we'll have the National People's Congress a new 5-year plan for the economy and announce measures that include cutting high debt, streaming state-owned enterprises, and reforming financial markets. So those are some things China will be doing. Mr. Liu, in his press conference at the IMF, also talks about that, with the Chinese playing a balancing act, let's say, as to how to move along with a new vision of what used to be called mixed economies. One of the problems from the banking data that things are interconnected, banking industry very interconnected. The large banks, from the Basel report and from the Federal Reserve, their report on industrial output, etc., that this is a new economy. Fiscal policy obviously cannot do it all, but at the same time, the IMF has recommended, and Madame Lagarde talks about negative interest rates. We talked some about that, and we'll hear the explanation from her on that particular case. But this is a different type of economy, therefore different business models have to be out there. It is opinion at this mic that the idea of these very large banks is an outdated business model. The old adage, too many eggs in one basket, but the problem is probability, and you're seeing that in Citibank. It's falling 27%. The others in the single digits, but at the same time, you have emerging nations having problems and demand problems in the U.S. It's sort of back to our seesaw model that we like to use. It's sort of an up and down. Now consumer electronics, computers in Q1, you can only sell so many of those items. So we'll look at Q2. Usually Q2, the summer months are some of the slower months, and then we pick up in Q3 and Q4. Let me just do the data here. We'll go to it. This is, of course, from the BBC. And the markets, this is Friday unless otherwise reported here. As soon as our pointer will let us change here. Okay. The BBC Global 30 down negative 32.8%. The FTSE, a lot of quote-unquote all shares, down 12.45. In Amsterdam, they were, we'll have to leave them out of this. In Frankfurt, negative 42.08 or not 8. In Paris, negative 16.34. In Brussels, 0.60, that's in the positive. In Madrid, negative 10.60. In Zurich, negative 6.40. In Moscow, a negative 3.77. In Johannesburg, negative 294.82. In Bombay, 604.59. And in Karachi, negative 0.47. In Lahore, 45.11 in the negative. And in Colombo, in the positive, 48.12. And in Tehran on Wednesday, 5.21 in the negative. In Sydney, 36.40 in the positive. On Friday, the Nikkei was down 63.0 in the negative. And Hang Seng in Hong Kong was also down negative 21.34. And in Shanghai, negative 4.24. In New York, negative 28.47. The Nasdaq, negative 7.67. In Zimbabwe, the Merck, the commodities market out in the city of Chicago, negative 2.005. The Merck in Zimbabwe, 8 to 16.72 on Friday, and finally in Mexico, 132.98. That would be in the positive. Let's quickly look at commodities as we wrap this up and go to Chairman Madame Lagarde. She should be chairperson. Anyway, nonetheless. Brent crude was down 73 cents, futures at $43.11. The spot was down $1.50 at $42.89. West Texas Intermediate crude was down $1.06 at $40.44. Due to the present conditions across the emerging markets, the mature markets, etc., this is one of the problems with energy there to cut output. These economies, the world economy, just simply cannot stand this building speculation that we're having here right now. There's really no reason for petrol to be above $40 a barrel. Period. Not at this juncture. So that's why you're having this fluctuation sort of up and down, playing with a base price of about $40 up to $43, but down. It was a little above that. But the idea of $100 plus is not going to happen. Not a very good economic term, is it? The Forex, gold was down $10.55 at $1,229.75. Dubai, gold was down $17.80, $1,226.30 there. Silver was up 4 cents for those that are in silver, $16.17. To Eurex Life Futures, cocoa was down $21. Robusta coffee, and no change there. White sugar was up $20.10. The Bloomberg Commodity Index at 80.39 is down 0.25 on Friday. So that will do it for us. For those in business, make next week a productive one. And we go on to Madame Lagarde and the IMF press conference there, the main one. And there are several others. Invite you. We'll put a link to the IMF's page, and we'll also put a link to the Federal Reserve report and several others. Good day.
Of the IMF. Very pleased this morning to introduce the Managing Director of the IMF, Madame Christine Lagarde. And of course, to Madame Lagarde's right is our first Deputy Managing Director, David Lipton. I think you have all received this morning the Managing Director's global policy agenda, and I would ask that when we get to the questions, which will be shortly after Madame Lagarde's remarks, that you would keep the questions short, and we'll try and take as many as we can.
Well, thank you very much, Jerry, and thank you to all of you, photographs included. I would like to start this press conference by recognizing and thanking Deputy first Deputy Managing Director, David Lipton, for having accepted to serve another term. And I'm delighted that you will have to face the two of us for a little longer. I don't know how many of you have walked this morning, but we are blessed by good weather. And I'd like to quote on this occasion Robert Frost and play the weather analogy when we comment on the global economy. The sun was warm, but the wind was chill. And yes, there is some sunshine in the global economy. We have global growth, and we are not in crisis. There are some signs that sentiment is improving, and a number of countries are growing at reasonably robust rates. But there are quite a few corners of the world which are downright chilly, in part because the recovery remains too slow and too fragile. We expect global growth this year to be at 3.2% and 3.5% next year. This makes it harder to spread economic warmth to the citizens of the globe. And it is not enough to lift living standards, reduce debt, and create sufficient opportunities for the nearly 200 million people around the world who are officially unemployed and looking for a job. And there is a risk that middle-class families and the poor actually remain behind, which would embolden the voices of protectionism and fragmentation. Many of you have received, and some of you may have read, our 3 flagship reports. They have all sent a clear and unmistakable message: downside risks are increasing. There are crisis legacy and weak balance sheets in many advanced countries. And emerging and developing countries need to watch declining commodity prices, high corporate debt, and volatile capital flows. And increasingly, our concern is also about the risk of spillovers, which has become a truly global phenomenon, from advanced economies to the rest of the world, from emerging market economies to the rest of the world as well. The GFSR, the Global Financial Stability Report that you received yesterday, clearly demonstrates that. So there is plenty to worry about. But as I have said, and has been repeated several times, we are on alert, not alarm. Because we believe that the global economy can actually repair legacies, can regain its vigor, and become more inclusive. But the current policy responses that we're seeing need to be faster and need to go deeper. Now, what do we mean with that? As you've heard, we are confident that the 3-pronged approach can actually work and can be mutually reinforcing. I hope you all have received this document, which is the global policy agenda that will be discussed with members of the IMFC on Saturday morning. And it focuses on these 3-pronged approach, which consists of 1, structural reforms. All right, we've been there, you've said that before, yes. But those structural reforms on which we're going to spend a bit more time and be more detailed depend on smart design, good timing, and support from other policies, which is why we talk about this 3-pronged approach. They come together, and they need to be tailored. We have seen reform commitment by the G20. Remember this additional 2.1% by 2018? Well, we recommend very strongly that this commitment be accelerated and be actually delivered upon in 2016. Second prong, we recommend more growth-friendly fiscal policies for all countries, including increased infrastructure investment. Now, of course, there are some countries with high and increasing debt that need to pursue further fiscal consolidations. But others have fiscal space, and most of them can recalibrate in order to make their fiscal policies more growth-friendly. Third prong, monetary policy still needs to support demand. Accommodative monetary policies have played a crucial role in the recovery, and negative interest rates, much commented upon, do play on balance a positive role, and they help. But monetary policy can no longer do the heavy lifting alone. Structural and fiscal policies need to play a greater role. And that three-pronged approach means going beyond the statu quo, moving faster. It might also mean crossing some political red lines for some. Is it worth doing it? Well, we contend that with the right policy mix and that three-pronged approach, it can add a powerful global package that would help generate faster and more sustainable growth. Final point. We also contend that cooperation is absolutely key. We have advocated cooperation. There is a certain degree of cooperation, but I would like to mention 3 examples where we believe that cooperation should be stronger. First example, the action to help refugees. Every second, nearly 30 people are displaced somewhere in the world. Now that requires bigger, broader and bolder approach, and one that is certainly based on cooperation amongst the nations. It cannot be the affair of one country. Second example, we need a strong international safety net, one that in terms of size, in terms of access, in terms of responsiveness, is going to be efficient, particularly in relation to the emerging countries and the developing countries. Final example, which is familiar to many of you, we need much stronger international tax cooperation. A lot of things have gone global, and it's unlikely to recede. But there's one thing which has not gone very global, and that is taxation, which is still very much a local affair associated with national sovereignty. Well, we contend that there has to be a lot more work and a lot more cooperation on a much broader basis in international taxation. So we don't have much power to change the weather, and I'm delighted that we're all meeting together in Washington with this pretty nice weather. And we can't change anything about it. But there is certainly something that collectively policymakers, their advisors, and international institutions can do about changing the economic weather. And we hope that this will not only be discussed this week, but also implemented later on. Thank you.
Thank you very much, Madame Lagarde. Okay, let's turn to your questions. And again, I would ask that you identify yourself by name and keep the question short. Let's begin at the back with, yes, ma'am, you, the lady with, thank you.
Hi. Elon Moy from the Washington Post. I have 2 short questions. The first one is broad, the second one specific. The first one is, Managing Director Lagarde, in your opening remarks, you mentioned the emboldened voices of protectionism, and in the recent WEO, you all mentioned Brexit as one of the chief risks to your global outlook. I'm interested in, broadly speaking, how worried you might be that public and political support for free trade and open borders, not just in Europe, but also here in the U.S. and across the world, is beginning to wane, and what that might mean for the global economy 10 years from now. And I'm also interested, domestically speaking, about the Federal Reserve. The IMF had last year urged the Fed not to start its process of normalization until 2016. The Fed went anyway. I'm wondering if you think the Fed made a mistake in December, and if you think it should continue rate hikes. Thank you.
You're really asking 3 questions in one, right? So on Brexit, we have clearly elevated Brexit as one of the serious downside risks on the horizon of global growth. And we believe that the risk of exit of the United Kingdom is a serious concern, that if anything is causing uncertainty, as is indicated actually in the growth forecast for the UK, and if that was to happen, the uncertainty would not disappear, because clearly the continued relationship with other countries in the European Union would be at risk and certainly debated for a period of time. It's been a long marriage between members of the European Union, and it's really my personal hope that it doesn't break. And like all marriages, good talks can actually help, and I hope that the dialogue can continue. As far as we're concerned, we are, as you know, doing an Article 4 review of the United Kingdom, which should be completed in the course of May, and we will certainly include in that Article 4 a special chapter associated with the quantification of the risk of Brexit, because it's clearly on the mind of many. In terms of trade, we at the IMF believe that trade has played an essential role for development, to lift people out of poverty in many corners of the world. It has improved the supply chains in many regions. It has contributed to development in significant ways. And we are concerned that the numbers we see now indicate slower international trade than we have global growth, which itself is not, as solid as we would like it. So, development of trade, support for trade, eradication of non-tariff barriers remain key priorities. And we certainly hope that the international community and the policymakers around the world will take that to heart and will continue to support trade on an ongoing basis. Your third point about the Fed, we were at the IMF very pleased to see that, number one, the sort of three-pronged approach of the Fed, data-dependent, gradual, and well-communicated, is very high on the agenda of the Fed. And we were also quite pleased to see that the impact of the international status of the economy and the downside risks on the horizons are actually taken into consideration when the Fed looks at its domestic economy and determines when and by how much to deal with interest rates. Thank you.
Thank you. Yes, sir, in the second row, China, CCTV.
Thank you. This is Qi Gao from CCTV. My question is about China. And what do you hope to achieve in your next term starting this year? And especially, how do you foresee China to fit in that 5-year plan? And early this year at Davos, you said you were concerned about communication with China's financial management team. And how are things now in that regard? Thank you.
Well, first of all, on the communication side, we have been delighted to see the communication efforts undertaken by policy makers, particularly Governor Zhu, because as you know, the PBOC is our normal contact point, and Governor Zhu is a governor of the IMF. Clearly, his major interview back in the fall, it wasn't with you, channel, but it was with another Chinese media, has been extremely helpful, and subsequent communication has helped as well. I think when it comes in particular to the exchange rate regime, it has clarified the situation for the better, because nobody likes uncertainties, markets in particular. In the next 5 years, I would hope that all currently underrepresented economies whose share in the IMF does not mirror their contribution and their participation in the global economy as we measure it by IMF criteria, that all these countries will be better represented and that we will be a better mirror of the global economy with their respective contributions. So that doesn't apply exclusively to China. There are other countries as well. Because I think the legitimacy of the institution and its capacity to commit and its credibility with members is in part, not exclusively, but in part dependent on it actually mirroring the global economy. I was very pleased to see the 14th quota review finally completed. I think it's a good step, but it's not the last step. There will have to be more work. There's a 15th quota review that needs to be discussed, for which we have a deadline in December 2017. And this will be an ongoing process, because it is the strength of this institution not to be riveted to a situation which is static, but which has to constantly review its resources, make sure that it is quota-based, so that it is strong and sustainable, and again, that it mirrors the state of the economy. But I'm convinced that in that context, China will play an important role, because it wants to be a player in the institution, and it wants to cooperate in the international domain, playing by the rules belonging to the club.
Thank you very much. Yes, Financial Times.
Chris Giles from the Financial Times. You just talked about the marriage between Britain and the EU, and you hoped it wouldn't break. If we do have a Brexit, you might well be the marriage counsellor. What advice would you give to your continental European governments who might come to you for advice of how they should negotiate with a Britain that wants to keep all the good things about the EU but not have free movement and not pay into it?
You know, whatever happens, Chris, and I very much, and you know, this is no mystery, and I've seen it repeated in the British press, I lean towards the let us stay together, work it out, because it's better than to sort of walk away from obligations and from the necessity to have a dialogue and to consider the issues collectively. But whatever happens, I think that all parties should rise above the domestic circle and should have a broader view of what lays ahead in terms of collective endeavour. Because keeping Europe together, after what it has gone through over the last century and what the risks are on the horizon, keeping it together is actually a huge asset, which is vastly underrated in my view.
Okay, I'm just going to take the question right next to financial.
Every time the international community has many times pledged to take action against financial secrecy, but every time a new scandal breaks out, we find out that there are new loopholes that have emerged. I was wondering, are you concerned that this could fuel popular anger and reinforce the perception that the elites can always find a way to avoid paying their fair share?
Well, Jeremy, I think it's obviously a risk when the rules appear to be skewed towards some and do not apply to all. Now, I'm not necessarily passing judgment on the legality or illegality of one scheme or the other, but clearly what has resulted from the review of these Panama Papers indicates that however important were BEPS, you know, the base erosion and profit shifting commitment and the automatic exchange of information, it is unfinished business. And everybody has to move beyond BEPS to see that there is actual implementation and that the net is inclusive and does not have little loopholes here and there. As I said earlier, taxation is regarded as a local matter associated with sovereignty, but international cooperation has to really be significantly improved, and we will be happy to play our part. We have a membership of 189 countries now, and all countries have to be included in that effort. As you know, a lot of our technical assistance is dedicated to helping countries put in place anti-money laundering and counter-terrorism financing. Well, more needs to be done on that front. And when we issue a report which is, flabbergasting, indicating that work needs to be done by the country, well, there has to be follow-up. And that's, I think, what policymakers need to focus on. What about implementation?
Thank you. I'm going to swing to this side of the room. Maybe the middle.
Toujours.
We will stand with Tunisia to help Tunisia deal with its difficulties related to its security, the development of growth, and the increase in employment. We had a program with Tunisia that was quite effective. And the program that's being negotiated is very close to being finalized. And I hope that by the end of the week, the program will have...
It's a tough challenge, especially with the declining commodity prices. Just wanted to know, how huge is this problem in terms of growth, financial positions of governments, especially for Nigeria, which now faces huge challenge of weak local currency, low government incomes, and of course higher inflation numbers that we have seen recently. Thank you. What are your policy recommendations for our authorities?
Well, of course, the low price of commodities in general, but of oil in particular, as far as Nigeria is concerned, is a critical issue. If I recall, 80% of I think it's 80% of your export and 60% of your revenue are the other way around, is actually oil dependent. So when there is a massive decline in the price of oil, those two also take a similar hit. So it has a major impact on the country, and our recommendation is that Nigeria seeks help from the international institutions that can best help, first. Second, that Nigeria is open-minded about using flexibility of the exchange rate in order to absorb some of the shock. We believe that it's more efficient than to have a list of products that are barred from being imported in the country. And third, we believe that it's really important that budget be completed, decided and approved. And we stand ready to help Nigeria if it wants to seek our help. I believe, having visited Nigeria in January, that it's also really important that the country looks at diversifying its economy, because it cannot rely exclusively on commodity prices, only particularly oil, because it might very well stay low for longer. And Nigeria is full of energy, of smart people, and can really transform some of its activities, including in the agricultural sector, where there is just too much by way of imports, when there could be a lot of transformation in Nigeria and local consumption.
Thank you. Swinging.
Duty not to be complacent and assess the reality of numbers. But, Madame Lagarde, some of those numbers are supported by the European creditors. So are the Europeans complacent when they try to avoid or to delay debt relief? Thank you.
I think the last thing that Greece needs at this point in time is delay. And there is one point on which I completely agree with the Greek authorities, which is that we need, and they need, to move fast. Equally, I think we've always been very consistent in saying that the objective is stability, sustainability, sovereignty of Greece, ultimately. And to reach those objectives, there has to be real and realistic numbers and sustainable measures. And that applies to both the hypothesis, it applies to the nature of the measures, and it applies to the maturity and the cost of debt for the country. So I've been saying, off and on, the program of Greece has to walk on two legs. That position remains true, but I would add that all of that has to be realistic and sustainable. And we are certainly doing the best we can under sometimes laborious circumstances.
Thank you.
Last year, you are speaking in parallel with President Putin. He had a major news event today, and he claims that the Russian economy is still not corrected fully, but the trend is good, he says. Do you agree? Thank you. The trend is positive.
Well, as far as Russia is concerned, you can look very carefully at the World Economic Outlook and the forecast we have for Russia. And while clearly the trend is directionally up, it doesn't mean to say that the results are outstanding. But there is improvement. It is true. For a country that is vastly dependent on natural resources, extraction of those resources, it means that there has been a lot of burden shouldered by the Russian population in order for those results to be directionally correct.
Yes, thank you.
We have a deep recession, high inflation, a high debt, and a high deficit, and a political crisis. How do you view the economic and political situation, and what Brazil should do to return to more normal rates of growth? Thank you.
Well, it's true that despite its legendary reputation of being generally sunny, warm, and I'm sure will be hospitable for the Olympic Games later on this year, there are very, very chilly winds blowing on the country. And with negative 3.8% forecast, the economic situation is very concerning in terms of unemployment, in terms of inflation, and clearly in terms of potential, in terms of output and potential output. So we hope that through whichever way, and we don't opine on political situation and internal debate of that nature, but through whichever way uncertainty will be removed, the Brazilian macroeconomic policy will be set on stable ground, with likelihood of no variation of the fiscal objectives, for instance, and with an economic environment that is business-friendly and conducive to the creation of growth in your beautiful country.
Okay.
A good thing, even if it devaluates your economy?
Well, first of all, on the reform, as I said, the 14th quota review has now been completed. The quota resources of the institution are stronger and more sustainable, and we currently have a very strong capacity to commit in case countries come to ask for financial support, which is incidentally clearly happening at the moment. We are walking into the 15th review, as is called for under the articles, and we will be holding discussions within the board in the next few months. We have a completion date which is set at the end of 2017, and we hope to complete that review. It will indeed consist of assessing the right size for the fund and looking at the quota formula as well, as we should. Mexico, we believe, has a fairly robust overall monetary as well as fiscal policy. If you look at the forecast, it has remained pretty stable compared with previous forecasts. It's one of those countries which is holding. In addition to the open account and floating exchange rate, which has been used as a shock absorber, Don't forget that Mexico also has, with the IMF, a flexible credit line in not insignificant amount, which Mexico was smart enough to use as a sort of insurance in order to maintain macroeconomic policy that actually stands and passes the test of the flexible credit line. And it's one of the really good examples of how to use a precautionary instrument in a smart domestic way in order to maintain the objective of its macroeconomic policy. Added to which it has undertaken, as you know, some significant structural reforms earlier.
Okay.
And if the answer to that is yes, then it is worth having that negative interest rates. Certainly not forever, and that is the reason why we're calling for the three-pronged approach. Because monetary alone cannot carry the burden by itself, and it has to be supplemented by the other two, the structural reforms and the growth-friendly fiscal policy, and the use of fiscal space where there is fiscal space, and we believe that there are countries that have fiscal space. Now, on your other questions of the non-performing loans, it's one of the crisis legacies that has not been sorted out, if you will, by certain countries, not only in the Eurozone, and not in all Eurozone countries, by the way. But in Italy, I think the authorities recognize that it's an issue that needs to be addressed. And the most recent scheme devised by the Italian authorities is an interesting approach, which we believe for the moment is limited in size and amount. But if it is, as I'm sure it has been, negotiated with the competition authorities in Europe, then it's certainly an interesting proposal that might have a longer and maybe a bigger life than we think today.
Yes, ma'am, right in the front.
But having said that, I just want to come back to you. It is so recent that I'd like to just reserve final judgment on the validity of the scheme because we haven't had time to look into it and under the skin of it.
To always hold the positive attitude to China's economy. Thanks.
Oh, no, it's not just in relation to China. It's in relation to any issues in life. Yeah. I think one is better off having a positive rather than a systematically negative attitude. Yeah. You actually feel better. Chinese growth, as you know, we have reset it to 6.5% to take into account the measures that have been announced by the Chinese authorities under the latest quinquennal plan. But equally, in the medium term, we are also a little bit more cautious, and we are concerned about the medium-term implementation of what you alluded to, which is in particular the state-owned enterprises restructuring. And the Chinese authorities, when I was last in China, have actually indicated their determination to start now the restructuring of some of the state-owned enterprises in various sectors of activity, which I'm sure you're familiar with, whether it's in relation to coal, steel, and various others, but predominantly in the heavy industry sector. And we hope that that is the case. Equally, we hope that in order to stimulate the Chinese economy to accompany that process, the Chinese authorities will resort to ways to improve consumption, to move from heavy industry to lighter industry and services, and to free up certain sectors of the economy, rather than to use the stimulus of additional credit, which needs to be reined adequately.
Okay.
Removal of those subsidy programs.
The removal of subsidies, yes. USTR has announced this today.
If that is the case, it confirms the point that I made earlier, which is that based on our limited experience within the scope of what the IMF is supposed to do, we have with China a serious and solid partner which has, as far as our IMF is concerned, always wanted to play by the rules, and which seems to be determined to follow that course of action. And if that happens, it's a clear indication that decisions made in relation to export subsidies are actually implemented. That's good.
Okay. Next two questions might be slightly confusing. First, you talked about realism in in regards to Greece, is it disingenuous for Europe to require a 3.5% budget deficit and that Greece pay back its debts? And secondly, are central bank stimulus, is it not preparing the world for further asset inflation that we've seen? Arguably, you could say that all the extra debt that we've seen around the world is evidence of that. And if not, should some, perhaps Japan or others, consider direct monetary financing?
On the my point about realism in and sustainability in relation to Greece, 3.5% in the short term might be achievable by some heroic, and I really mean heroic efforts on the part of Greece and the Greek people. Might be. We are skeptical about it, but we are open to seeing what additional measures the authorities are proposing. What we find highly unrealistic, on the other hand, is the assumption that this primary surplus of 3.5% can be maintained over decades. That just will not happen. So that's where I draw the line between the short-term objectives and the medium to long-term similar objective. On the on monetary stimulus, as I said, it doesn't apply across the board, and I think if there is anything we learned from 2008 is to beware of the across-the-board recommendations. But clearly there are instances where monetary support should be continued, number one, should absolutely be accompanied by the other two prongs that I've mentioned, the structural reforms and the fiscal policy that we have described. And as far as Japan is concerned, we have fairly robust criteria under which intervention is legitimate. And that clearly can happen in the case, and only in the case, where very disruptive volatility must be avoided. So we are watching carefully what's happening on the Japanese markets. But that's the instance where intervention is, in our view, legitimate.
感谢大家参加今天的新闻发布会。G20财长和央行行长会刚刚成功结束，会议主要讨论了当前的全球经济形势、强劲可持续平衡增长框架、国际金融架构、投资和基础设施、金融部门改革、国际税收、气候资金、绿色金融以及反恐融资等议题，并发表了会议公报。
Thank you for coming to today's press conference. We have just concluded the G20 finance ministers and central bank governors meeting. The meeting discussed the state of current global economic situation, a strong, balanced, and sustainable growth framework, international financial architecture, investment and infrastructure, financial sector reform, international tax, climate finance, green finance, and counter-terrorist financing. We have also published our communique.
借此机会呢，我向大家简要介绍会议的情况，并回答媒体朋友的提问。
Taking this opportunity, I would like to brief you on the meeting and take questions from you.
关于全球的经济形势，会议认为全球经济继续复苏，金融市场价格基本恢复到年初水平，但是 增长仍然温和且不均衡，持续面临着下行风险和不确定性。
First, on the global economic situation, we agree that the global recovery continues, and the financial markets have recovered most of the lost ground lost earlier in the year. However, growth remains modest and uneven, and downside risks and uncertainties to the global outlook persist.
会议欢迎一些 G20 成员近期采取政策措施来促进增长和稳定市场，并重申承诺在国备层面和 G20 成员共同使用的所有的政策工具，包括货币、财政政策和结构性改革，来增强信心和促进增长。
We welcome the policy actions being taken by a number of G20 members to support growth and stabilize markets. We reiterate our commitment to using all policy tools, monetary, fiscal, and structural, individually and collectively, to foster confidence and strengthen growth.
会议强调清晰的沟通，在宏观经济和结构性改革方面的政策行为，以减少政策的不确定性，减少负面溢出效应，并增强透明度。
We will clearly communicate our macroeconomic and structural policy actions to reduce policy uncertainty, minimize negative spillovers, and promote transparency.
关于强劲、可持续、平衡增长框架，会议在强调结构性改革议程方面取得了切实进展，确定了改革的优先领域。
On the strong, sustainable, and balanced growth framework, we have made concrete progress in our enhanced structural reform agenda, and we have identified the priority areas of structural reform.
并将在此基础之上制定一套指导原则，作为国别改革行动的参考指南。改革的优先领域和指导原则将以灵活的方式加以实施，使各国能够照顾到本国的具体国情。
On the basis of those priority areas, we will further develop and agree upon a set of guiding principles as a reference guide to national reform actions. The priority areas and guiding principles that will be applied in a flexible way to allow members to account for the specific national circumstances.
会议期待制定一套用于监测和评估结构性改革进展的指标体系，并报7月份财长和央行会议审核。
We look forward to proposals with a full set of indicators to help monitor and assess our efforts and progress with structural reforms and challenges for endorsement at our July meeting.
会议同意进一步探讨促进全球贸易、提升高质量投资以及促进创新的措施，并继续扩大致力于扩大包容性和减少全球失衡。
We will also explore further steps to revitalize global trade, lift quality investment, and boost innovation as engines for growth. We remain committed to promoting greater inclusiveness and reducing excessive global imbalances.
关于投资和基础设施，会议重申继续推进投资议程，并重点关注基础设施投资，坚持数量与质量并重。
On investment and infrastructure, we reaffirm our commitment to advancing the investment agenda with focus on infrastructure, both in terms of quantity and quality.
会议鼓励多边开发银行实施优化资产负债表的行动计划，并共同制定支持高质量项目的量化目标。会议期待就启动全球基础设施互联互通倡议、互联互通联盟的倡议开展进一步工作， 以增强基础设施投资计划之间的协调与合作。
We encourage MDBs to carry out the action plan to optimize their balance sheets as well as to take joint actions to formulate quantitative ambition for high-quality projects. We look forward to further work on launching the Global Infrastructure Connectivity Alliance to enhance the synergy and the cooperation of infrastructure programs.
同时，开发多样化的投融资工具，吸引私人部门投资，并加强发展中国家的机构能力建设。
Meanwhile, we will develop diversified financing instruments for private sector's investment in infrastructure and to enhance the institutional capacity building of developing countries.
关于国际金融架构，会议承诺继续加强国际货币体系的稳定性和韧性，督促在2017年年会前完成 IMF 第15次份额总检查，进一步增加有活力经济体的份额占比。因此，可能的结果是新兴市场和发展中国家份额占比整体提高。
International financial architecture, we are taking actions to continue strengthening the stability and the resilience of the international monetary system. We look forward to the completion of the 15th General Review of Quotas by the 2017 annual meetings. We reaffirm that any realignment under the 15th review in quota shares is expected to result in increased shares for dynamic economies in line with their relative positions in the world economy, and hence likely in the share of emerging market and developing countries as a whole.
期待世界银行按照达成一致的路线图和时间表实施股份审议的成果。会议还就主权债务重组、应对资本流动、扩大 SDR 使用范围等进行了讨论。
We look forward to the outcomes of the World Bank Group's shareholding review in accordance with the agreed roadmap and time frame. The meeting also had discussions on the restructuring of sovereign debt, dealing with the capital flow and the possible broader use of the SDR.
关于金融部门的改革，会议重申将及时、全面和一致地落实已经达成共识的改革承诺，继续加强对改革实施情况和效果进行监督。会议支持 FSB、IMF 和 BIS 等国际机构为建立有效的宏观审慎框架，并加强相关国际合作提供支持。
On the financial sector reform, we reiterate our commitment to support the timely, full and consistent implementation of our agreed financial sector reform agenda. We will continue to enhance the monitoring and implementation and effect of reforms. We look forward to the coordinated work by the IMF, FSB and the BIS to enhance macroprudential frameworks and tools.
会议支持 FSB 对市场流动性变化进行评估，并提出政策建议，承诺加快实施金融市场基础设施原则，加强普惠金融等方面的工作。
We welcome the FSB's work in assessing the shifts in market liquidity and consider policy measures if necessary. We also reiterate a commitment to expediting the implementation of the principles for financial market infrastructure, and we are also affirming our commitment to promoting the financial inclusion.
关于国际税收，会议重申致力于及时广泛地落实 G20、OECD、BEPS 项目，鼓励平等参与新的包容性框架。会议呼吁所有未承诺在2017年或2018年前落实税收情报自动交换标准的国家作出承诺，不再拖延，并签署相关多边公约。
On international tax, we reiterate our commitment to timely and widespread implementation of the G20 OECD BEPS package and encourage all relevant and interested countries and jurisdictions to join the new inclusive framework on an equal footing. We call on all relevant countries and which have not committed to implementing the standard automatic exchange of information by 2017 or 2018 to do so without delay and to sign the multilateral convention.
会议欢迎各国和国际组织为加强发展中国家的税收能力建设共同做出持久努力。
We welcome the efforts by countries and international organizations to build capacity on tax matters for developing countries.
关于反恐融资，会议重申坚决打击并应对恐怖主义融资的所有来源、技术和渠道，呼吁快速有效落实金融行动特别工作组 FATF 的标准，打击恐怖主义融资新综合战略以及联合国相关的决议，号召有关国际组织对非法资金流动的来源、技术和渠道进行分析。
Countering terrorist-related financing, we reaffirm our resolve to combat decisively and tackle all sources, techniques, and channels of terrorist financing. We also call on all countries and jurisdictions to swiftly and effectively implement FATF standards, the new consolidated strategy on combating terrorist financing, and provisions of UN resolutions. We call on relevant international organizations to analyze the sources, techniques, and channels of illicit financial flows.
关于绿色金融和气候资金，